Over the past few days, I spent hours upon hours scrolling through endless indicators on TradingView, trying to find a strategy that can accurately predict trend reversals. And boy, did I find some really good strategies. But of all the strategies that I discovered, well, let's just say the one I'm gonna be showcasing in this video is by far the best. Stay tuned, because we're gonna go over what this strategy is, all the indicators needed to make it work, as well as the entry and exit conditions. If you find value in this video, remember to leave a like. Let's get into it. Now, let's begin by adding all the indicators needed for this strategy. To do that, you want to load the 15-minute time frame of Ethereum against the US dollar. But you're not going to be limited to this, because this strategy can actually work on any trading security as long as the time frame is 15 minutes or under. After that, you're going to click on indicators. Now, the main indicator of this strategy is called Bollinger Band. Type that in. And we're gonna click on it twice because we need 2 copies of this indicator. Then we also need to add a volume indicator called Hawkeye Volume. This one by Nanda86. Now, the next thing that we need to do is to change the settings. So access the settings of the first Bollinger Band indicator. Then you want to change the standard deviation value to 1.75. Then head over to the Style tab, and then here you want to disable the basis and change the color of the upper and lower bands to red. After that, click OK. For the second Bollinger Band indicator, we're going to change the standard deviation value to 3. After that, we don't need to change anything else, so click OK. Lastly, double-click on the Hawkeye Volume indicator, and then on the Style tab, you want to change Color Zero's opacity to 0%. I'm also going to change the plot color to white. I'm also going to reduce the thickness of it, disable the spikes option, and we're done. Now, as you can see, we have 3 indicators on our chart. 2 copies of the Bollinger Band indicator and a volume indicator. I think by now that most of you know what a volume indicator is used for. It's right there in the name. It's used to track volume in the market. Volume is important in trading because it provides insights into the strength and potential sustainability of price movements. How this indicator works is really simple. These green histogram bars represent bullish volume, and these red histogram bars represent bearish volume. This white line is a volume-based moving average. Whenever these histogram bars are above the moving average, it indicates that the volume in the market is high enough. And that is what we're gonna be looking for before we take long or short positions. Now, what about these 2 indicators? What are we going to be using them for? Well, these are basically the core indicators of this strategy. And we're going to be using them to identify extreme areas where the price might be bound for trend reversals. So like here, this was a bearish trend. After the bearish trend, right here, price touched the lower band of one of our Bollinger Bands indicator, which is this blue line at the bottom. Once that happened, we can see a trend reversal to the upside. And then at the top, it touched the upper band of our second Bollinger Band indicator, which is this blue line, and we get this small reversal to the downside. And then during consolidating markets, you can see that the price is going to be confined inside the red Bollinger Bands. It eventually managed to touch the lower band of the blue Bollinger Band indicator, and we got this movement to the upside. Same thing happened here, a small consolidation and an eventual move to the upside. Got close to the upper band, which triggered the price to move down. And down here, after touching the lower band, we got this strong bullish push. This is exactly how our strategy is going to look like. We're not going to be looking for super big movements. Instead, we're going to be focusing on those small scalps that cover only a few pips per trade. Next, we're going to go over the entry and exit conditions for this strategy. So how do we take a long position? Well, let me show you. The first condition is we want the price to reject off of the lower level of the blue Bollinger Band indicator. Basically, we want it to touch this blue line with the wick, or it can also close right on the line, or it can even close under the line. All those scenarios represent a price rejection. Now, remember, if it touches this line with the wick, it also needs to close under this red line. Simple. Condition number 2 is we want the next candle after this to be a green candle, and it should also close above the lower level of the red Bollinger Band indicator without closing above this yellow line. So this is what we're looking for, a green candle that closes above this lower red line, and at the same time, it should close under this yellow line. The last condition is to confirm that this last candle has high enough volume to push the price in the direction of our trade. For that, we just take a look at the Hawkeye Volume indicator. This last histogram bar should be colored green and should also close above this white moving average. All our entry conditions are met on this candle, so we're gonna take a long position. We're gonna put our stop loss right at the most recent swing low. For the take profit, we're gonna target a risk-reward ratio of 1 to 1.5, letting the trade run, and it hits take profit. Now here is another long position. As you can see, the trend was bearish all the way to this point. After that, we had the price rejecting off of the blue Bollinger Band indicator. Because as you can see, this candle closed below this blue line. This is the rejection that we're looking for. Now, condition number 2 is we need the next candle from here to be a green candle that closes above this red line, but it shouldn't close above this yellow line. So let's see what's gonna happen. As you can see, this candle closed above the red line while still being under the yellow line. The last condition is we need to make sure that this entry candle has a high enough bullish volume to push the price in the direction of our trade, which means this last histogram bar needs to be colored green and it should also close above this white moving average. All our entry conditions are met on this candle, so we take a long position. Now, to take a short position, we're gonna do the opposite of everything we did for the long positions. So first, we identify a price rejection above the upper blue Bollinger Band indicator after a bullish trend. This was a bullish trend, and then this candle touched and closed beyond this blue line, indicating a potential reversal to the downside. Now remember, a rejection isn't just about a candle closing above the line. It can also just touch it with the wick, like how this candle did. Now, condition number 2 is we need the next candle from here to be a red candle that closes under this red line without closing under this yellow line. Let's see if that happens. So this is what we're looking for, a red candle that closes below the red line but above the yellow line. Then lastly, we need to ensure that this last candle has enough bearish volume to push the price in the direction of our trade. For that, we just take a look at the Hawkeye Volume indicator. We need to ensure that this last histogram bar is colored red and it should also close above this white moving average. All our entry conditions are met on this candle, so we're gonna take a short position. We're gonna put our stop loss right above the most recent swing high. But for the take profit, we're gonna target a risk-reward ratio of 1 to 1.5, letting the trade run, and it hits take profit. And there you have it, ladies and gentlemen, a simple and straightforward strategy that is super profitable. Go ahead and play around with it and see what other confirmations you can add to make it even better. If you have any questions, let us know in the comment section below. Now, after spending countless hours looking for this profitable gem just for you, all I ask in return is you take a second and smash that like button below. And you can even consider subscribing to stay tuned. Thanks for watching, see you next time.